Hey guys, this is a market update. We're in the middle of a bull market right now, and Bitcoin is waiting for the next phase, the massive expansion to new all-time highs. I'll show you why I think that right here. And then we have this data from ARK Invest, which is showing us fundamentally why crypto has been outperforming, not for a few years, but decades at this point. And there's still a lot of growth. So we'll go over that in this video. Bitcoin right now has had its recovery phase, right? So out from the bear market lows and all the bankruptcies, and now we're kind of recovering out. That's the first phase done. Now we wait, and Bitcoin waits. It's actually recovered its trend rate of growth at this point. So this is the Bitcoin price on a logarithmic chart. So it's essentially mapping the growth of the Bitcoin network over time. And the orange line is what I believe to be the trend rate of growth for the network. And so over time, the price will go up simply based on the trend rate of the Bitcoin network growing, because it's growing over time fundamentally. So anything under this line for me is brilliant to buy a network that is priced underneath its actual growth rate. We are at the trend rate now. This makes a lot of sense. This is a recovery phase. This always happens. We come into this trend rate, as you can see here, when we sell off, we recover back into the trend rate. The trend rate is the price of what Bitcoin should be based on its actual adoption and growth, in my opinion. But we are looking for that big bull market, right? The expansion. Why would I sell an asset that is accurately pricing in its fundamental value? I wouldn't. When the price moves up here, that is overbought, and that is typically somewhere where the Bitcoin price sells off. What is going to push us into this overbought territory? It's debt creation, cutting of interest rates, printing of money, the debasement of currency. This, in my opinion, is 100% certain based on demographic and macroeconomic factors. There's no other option for central banks. And they're playing this game over and over again. But for me, this expansion will happen. I just don't know when, but the when is irrelevant. Right here, Bitcoin is just going to wait around these levels, right? It's had its recovery. It's at the trend rate of growth. But what pushes us up into overbought territory is not Bitcoin growth. That can only happen fundamentally, which takes years and time. What pushes us up to new all-time highs is simply the debasement of the US dollar and other fiat currencies, which artificially and optically pushes up the price of Bitcoin in relation to that dollar, because that's what we trade it against. Bitcoin's price, 40,000, is against the dollar. As the dollar weakens and gets weakened by rate cuts, monetary debasement, debt creation, which is, I believe, 100% certain, then you get the optical illusion of a massive higher price in Bitcoin as the dollar gets weaker. I believe that will happen, but of course, we can't price it in until it happens. So a waiting game for that, but the time is irrelevant. The direction of travel for me is absolutely certain. So it will happen, and we're waiting for that. It's a game of time. If you do trade, check out the Bybit link down below, up to $30,000 as a deposit bonus. If you trade on there, you can check the details via the link in the description. Crypto has fundamental growth, but it is also the exact opposite of currency debasement, because Bitcoin specifically is a fixed asset. And so it's the perfect mirror to what's happening. Bitcoin has outperformed every major asset over longer time horizons. The annualized return has averaged around 44% for Bitcoin versus other major asset classes around 5.7. Now, annualized returns are great, but of course you have to look at risk-adjusted return as well. So let's look at that. The average CAGR is around 44% for BTC, 5% for other assets. Emerging markets do not have any real growth, as you can see here. The growth in those markets doesn't relate to actual strong investable assets, which is, you can't really do that, which is why Bitcoin is so great, because Bitcoin is being adopted in emerging markets, but it's actually a strong asset that can monetize that. Whereas you can't invest in equities and things like that in emerging markets because they just get wrecked. They're not trustworthy in terms of the markets and the market structure and everything else. So they're uninvestable, really. Equities are still great, especially US equities. They have a lot of value in them, and they do protect you from the debasement of currency. But Bitcoin is just the pure version of that. And so adding it to a portfolio, seems logical. You can see Bitcoin and Ethereum here. Ethereum has underperformed a little bit this year, but you've had so much speculation about the ETFs for Bitcoin, and we're in a halving year. But what you can see is that they're actually very correlated. Bitcoin just outperforming here. Ethereum usually outperforms towards the mature end of a bull market, which we are not in right now. You can see here from Bitcoin's price and its on-chain market mean. So essentially, the long term of Bitcoin's price rise, and then as the actual price moves above that, essentially that's a bull market, right? Because you have speculation and flows into the price, pushing it up above its natural rate of growth. That is a bull market because essentially what's happening is the price is growing faster out into new all-time highs. So you can see that happening. See that right here. As the price moves up through its market mean, that is a foreshadowing of that bull market. Now that bull market comes actually when central banks cut interest rates and print money. So that bull market is not really a bull market in Bitcoin because the network can only grow a certain amount each year. But what's happening, like I said, is that the debasement of currency is optically creating much higher prices for assets. And the absolute mirror of that is BTC. So we can see that here as well, going up to new all-time highs. And then if we look across, we've actually just crossed this again, right? So are we going to new all-time highs? I'm very confident in that, but of course, that's just my opinion. ARK Invest also is looking at smart contract chains. This is different to Bitcoin, in my opinion, very, very different. More of a technology play. They're kind of decentralized databases, basically, is what they are. But there's many things that can be, created on these, and it can take away from the current banking system. Just as social media took away and completely destroyed mainstream media, I think this is going to happen to the banks with, crypto networks as well, banking and fundraising and trading and settlement. You can see layer 2 networks on Ethereum. You can see the growth right here. So Ethereum is scaling to new use cases, dropping fees, increasing users. So there's a lot of growth here to invest in. We can see that the global financial services revenue is $17 trillion. That's a 3.3% take rate on the value of all financial assets. Smart contracts could generate annual fees of more than 450 billion and create more than 5 trillion in market value, increasing at a compound annual rate of around 80% and 30% respectively. Now, ARK Invest, they're moon boys, right? So you have to discount all of their time horizons and also the prices they come out with by like 80% because they just come out with these ridiculous things. But the growth is very clear, right? Larry Fink has said everything's going to be tokenized. Now, when it comes to crypto, what we can invest in, I think the value comes in a blockchain being genuinely public and decentralized and credibly neutral. All a blockchain is a database. There are many databases out there. BlackRock has them, JP Morgan has them. Those databases are worth something, but the crypto part is the only thing that differentiates it is that it's public and genuinely credibly neutral. If it isn't, then it's just another database and it's not very worth much in my opinion. I don't want to invest there. The innovation of blockchain, in my opinion, is a public network that cannot be controlled. And I think there's only a few of those that we can actually say are actually that. I made some updates to the Crypto Investor course. If you have it, make sure to go and watch them. If you don't have it, I'll leave the link below. Just some updates here on what's happening with Ethereum, Bitcoin, the cycle, and many other very important data points. So if you want to check that out, link in description. So what we can see here is Bitcoin, the risk-adjusted return of Bitcoin. If you're looking to add some, right? Like I've said, we're still at the bottom side of the cycle, so it's still a time to invest, in my opinion. We're not at the highs, right? Which is much worse time to invest because you're paying a lot more. So we're still in the investable region, but we want to know, is this a good value, right? Because there's a lot of volatility here. Well, what you can see is that this is 5 years annualized volatility 2018. And then to the right-hand side, 5-year volatility annualized 2023. So according to Jamie Coots here from Bloomberg, other assets are actually getting more volatile, right? Which is quite worrying, I guess. And Bitcoin is actually reducing its volatility. So this is this is obviously taking Bitcoin from what it was in the beginning, which was insanely volatile. And obviously its volatility is reducing over time. This will change, I think, in the future as it becomes slightly more correlated with other world assets as well. But volatility is increasing around the world, right? So it's something to be aware of. This is the Sharpe ratio of all these assets. Sharpe ratio is the risk-adjusted return. So it takes into account the returns that you get plus the volatility. So volatility is fine as long as you get paid for it in the end by much higher prices. If something's very, very volatile, just moves like this, but actually doesn't grow, then you don't really want to invest in it. Well, Bitcoin and Ethereum, which is orange and green here, are the best risk-adjusted investments that you can make versus all of these other things. They have to be part of a portfolio. If you're not putting these in, what are you doing, right? If you're Jamie Dimon saying Bitcoin is trash or whatever, it's the best risk-adjusted investment you can make versus everything else. So, how can you not add these to a portfolio? And that's up to the individual how much they want to add. But you can see that Bitcoin and ETH and the NASDAQ, which is technology, these things actually have real growth in them. And that is the safest thing to invest in my opinion. In this phase right now, before the central bank is really printing a ton of money and cutting rates, there is this phase where the market is waiting for that. And of course, you get potential downside pressure in selling, because what's going to flip the central bank is when unemployment rates just tick up by like 2%, 3%, right? And everyone just freaks out and says the economy is going to absolutely, fall like a stone. The central bank's still got rates at 5%. No one's going to come and help us. Sell everything, right? You get this kind of shock. And then the central bank steps in. So that's always something to be aware of. I don't want to try and trade that, right? Because I think you're missing the forest for the trees. What I want to trade is the inevitability of currency debasement that's going to continue to happen. And so right here, we're in this phase where, look, we're under the long-term growth rate. That's the signal. And the other signal is that central banks will print money at some point again. We've seen New York Bancorp basically halving value. There's struggles here. And we know that they print money to bail them out. And Bitcoin will be the mirror to that. If you want to trade, Bybit, 30,000 deposit bonus down in description. The crypto course link down there as well. I'm James, this is Money G. Cheers for watching, and I'll see you in the next one.